I'm very excited for us to dive into the U.S. tax overview. So I am joined here today by Brian Klinsman. He is from EY, and he is going to be taking us through a high-level introduction to U.S. taxes. He's going to cover a variety of topics, like an overview of how taxes work. He's going to give you a little more information on how to understand the 1040 form, and then give you all the knowledge that you need to know on what to expect when filing taxes in the United States. I know, again, this can be a new topic. You to drop any questions that you might have about taxes or have for Brian in the chat. We will do our best to try and answer any questions that you have along the way, but Brian will also be doing a live Q&A at the end, so we can hopefully answer any questions that you have. So Brian, I am going to pass the mic off to you, and we can go ahead and get started.
Thanks, Courtney. I appreciate that very much. I'm so excited to have so many people here from all over the world. I just feel like a world traveler just being with you all today. So that's great. Again, my name is Brian Klinsman. Just a really quick background. I'm a certified financial planner, which means I work with people and individuals helping them plan their financial future, which is really, I love that. Part of my background is I have a degree in taxation, which I know sounds thrilling to you all, but it really, I love numbers. And I think that when we talk about the tax system, it doesn't need to be complex. It's actually pretty straightforward. So I thought I would start, just as a quick overview to think about, every country really has a tax system. It's how they usually pay for their roads and schools and hospitals and sometimes military, things like that. And the United States is no different. We have a tax system that's built for that. In fact, we have in the United States Constitution, which kind of drives all of our laws, we have 27 amendments. Now, the 16th Amendment passed in 1913 is what gave our Congress the ability to tax our citizens on their income. So it's a pretty old system, over 100 years old, and it works pretty well. We have a couple of layers we'll talk about. We'll talk about the federal government. So anybody that works in the United States and earns income will pay taxes to the federal government in some way. There's a possibility that if you work in a certain state, you will also pay another layer of taxes, which is called the state taxes for that state. And even in a rare case, you might even be in a city or a local community that has a local tax. That's not very common. So we'll go into all those things a little bit later, but that's kind of an overview of what we're going to talk about today is the payment and the collection of taxes in the United States. So everybody, whether you're a citizen here or you're working in the United States, if you have earned income, that will be reported to the government. And since it's reported to the government's expecting you to also report in on your own. Courtney mentioned that Form 1040, which is just the number of the form that individuals use. Corporations and other things, they use different forms, but the Form 1040 is for individuals. And today what I want to do is just talk a little bit about the big picture of this. So we'll start with our first slide, and we'll go through just a little bit of information about how this happens. So when you're working in the United States, you'll have a paycheck, and that's probably not uncommon to you. A paycheck is just sort of a documentation or a historical record of the hours that you worked and the pay that you earned for that period, sometimes a week or 2 weeks or even a month. So that paycheck comes, and the person that you're working for, it could be a hospital or some other group like that they will withhold taxes on your behalf. Now you have a say in this. So basically on the front end, when you start working, you will fill out a form. It's called a W-4, but you'll fill out a form that says, hey, this is how much taxes I think I want you to, or how much income I think I'll make, and I want you to withhold on. And your employer will do that. They'll withhold those dollars and they'll send them on, they'll route them on to the government. So they'll forward them to the government on your behalf. So it's really kind of a pay-as-you-go system if you think about it. So during the year, all 12 months of the calendar year that this is based on, Think of it like sending in little donations or little contributions from your paycheck to the government. And since we don't know how much we're going to end with at the end of the year, it's kind of a guess for everybody. Everybody sends in what they think they're going to owe in proportional amounts during the year. At the end of the year, when the calendar year is over, we have 3.5 months in this country up until April 15th to turn in our tax return for the prior calendar year. So that's what we're in the process of right now for 2024, and it happens every year. So what happens is you fill out your 1040, as we mentioned, and you list all your sources of income. And by the way, it's not just your earnings. If you have maybe some interest on your savings account or an investment, or maybe you even sold a property or a stock, any kind of income or gain that you have will be reported on your tax return. Now, there's also a place on the tax return, we'll go over this a little bit later, for deductions or expenses that you had. And the government does that as sort of a way to help you ease your tax burden. If you had a lot of expenses, let's say you had maybe a lot of medical bills, or you paid taxes on your house that you owned or something like that, there's some tax breaks, we call those. There's even some tax credits that they offer to people in special situations. Maybe you put solar panels on your roof, for example, or maybe you have a child that's in school or even with special needs. So the government does its best to offer some tax breaks to people also. And when you get all those balanced out, you've listed all your income and you've listed all your deductions, then you figure out your tax that's due. And I'll just use a number to give you an example. I like examples. Let's say that your tax return came up and said you owe $1,000 in total taxes. And then we look at how many dollars you sent in during the year. Remember those contributions we talked about through your paycheck. And once those are done, let's say you sent in $900 during the year. So the difference is $100 in my simple example here. And so you would have to just send in $100 more with your tax return in April, and that would square your account. Everything would be even. Alternatively, if you sent in a little bit extra, maybe you sent in $1,200 because you were just guessing like we all do during the year, and your total tax was only $1,000, then they owe you a $200 refund. So again, the tax return is just to figure out and settle up on who owes who at the end of the year. Okay, let's take a look at the next slide where we can talk a little bit more about these layers of tax. So in your income world, when you have payroll or pay, there's a couple of kinds of tax that I want to focus on just for a moment. One's called the Social Security tax, and one's called Medicare. Now together, these have an acronym. It's called FICA, F-I-C-A. You may see that acronym. But really, this is our country's way of taking a little bit of money out of your paycheck and making a deposit into an account for way down the road when you retire. That's what the Social Security tax is set up for. So in the United States, people contribute during their entire careers into this Social Security account. And then when they retire, the government sends them a check back each month for the rest of their life. It's called our Social Security retirement system. And so that Social Security tax is just your way of making contributions. By the way, in case you're interested, that contribution is half from you and half from your employer. And so that's kind of nice that whoever you're working for, you go halvesies on that, as we say, you go halfway each way. The Medicare tax is a similar amount. It's a smaller amount, and it's to help pay specifically for medical and medical bills during retirement. So through payroll, you have automatic, on the left side, the payroll, you have automatic deductions for Social Security, that's the retirement, and then the Medicare, that's for healthcare during your working years. On the right-hand side, then we have these layers of tax that I mentioned earlier. So the federal tax, again, that goes for, big government projects. Really, who knows what they spend it on? We sort of wonder ourselves sometimes in the United States, but it's an important thing to have infrastructure and all the things that we enjoy. And I mentioned the state income tax. Not all states have that, right? So some states don't have a state income tax. I live in Texas. We actually don't have a state income tax. but we do pay higher things for things like property taxes and other things that are not related to your payroll. And then I mentioned finally local income tax, and it's just a handful of places around the United States that might have a local income tax as well. Again, on the right-hand side, these are the types of taxes that you have the ability to control the amount, or sometimes I say the volume of how much you have withheld from your check. And that way you have the ability to help manage that process. Our goal was really to try to get as close to zero as far as who owes who at the end of the year. Some people consider that to be a success if they got it exactly right. I don't know anybody that's ever done that in my entire career, actually. And I know some people actually love to get refunds. They love to send in a little bit extra because they know the government will send them a check back at the end of the year.
Brian, not to interject here, but that is typically how I always have it set up too, because I like not only to get the money back, but it almost feels like I'm intentionally saving it up without necessarily knowing it throughout the year too. I know the goal is ultimately to break even, but it is nice to kind of get that, bonus in the beginning of the year. So I always try to make sure to file my taxes as soon as I possibly can, so I can get my, refund back quicker. And then just to let everyone know too, if you do have questions, I want to encourage you to make sure that you're dropping them in the chat. We're very lucky to have Brian join us today, and he'll be happy to answer any questions about any of the information that he's covering. So if you are confused about a topic that Brian has, and Brian, the example that you gave earlier about the refund or about what they might owe, I think that was great. And it really puts into perspective for all of our healthcare professionals joining and gives them an idea of kind of what to expect. So we'll continue on, but definitely don't be shy and drop some questions in the chat so that way Brian can answer them for you while we have him on the broadcast.
Absolutely. Thanks, Courtney. That was great. I think that as we continue on to the next slide, one of the things that we want to get into is a little bit more detail on these three layers that I've mentioned before: the federal, state, and possibly local income taxes. So just to review, everybody will pay the federal income tax who works in the United States, whether you're a citizen or you're here working. And that's just applied nationwide based on the amount of your income. And I mentioned before that, and we'll get into a little bit later about how much tax that is in just a moment. The state income tax will depend on where you live and work. It's interesting that there are some cities in our country that straddle or on the border of two different states. I used to live in Kansas City, for example, and that's half in Kansas and that's half in Missouri. So it's always interesting that some people may live and work in different places. And so that may have an impact on the state income tax that you pay. And then finally, the local, again, I said it's not very many. I believe Philadelphia, for example, is one, and I just don't know them all, but I can tell you that there's just a handful of places. So you could have potentially 3 layers of those. And again, those will be managed for you by your employer. They'll be taken out, and you can make those contributions at whatever level you think is going to be a good guess to get you to zero at the end of the year. Okay. All right, let's go to the next slide, because I think what we want to do is have a good discussion about these tax rates. You know, it's interesting with the tax rates in our country, there's something called progressive. And don't be afraid of that word. I think you probably understand the concept, which is in our country, they want to tax people with lower income at lower rates, and higher with people with higher income at higher rates. And so it's not a flat system in our country. There's been great debates about this, but it's been a progressive system since the beginning. And I'll just explain a couple of points about this chart to give you an example. And so you see that for the first $11,600 of income that you make in a year, it's only taxed at 10%. So they'll take basically, if you made $11,600, they would take $1,160 would be your tax bill for the year. Now, once you go over $11,600 all the way up to $47,150, all of those dollars are taxed at 12%. So we call that a layer or a tier. So notice that tier of your income is taxed just slightly higher, from 10 up to 12%. Now, anything over the $47,151, all the way up to just over a little over $100,000 jumps up to 22%. That's a bigger jump, isn't it? And so that's where you start to see the kind of the ramping up. Now it does sort of level out for a couple of brackets after that, and it jumps up. You can see to 32 and 35, and even that 37 bracket. If you're, I'm going to say, fortunate enough to have over $609,000 of income, first of all, congratulations. That's awesome. So it's something to brag about if you're in the highest tax bracket. But notice that if you did, I'll just make an example. Let's say somehow you made $10,000 for the year. Not all of those dollars were taxed at 37%. It was only the dollars over the 609,350 number. So if you think about our system, it does give tax breaks, really, in the sense of lower tax rates. It gives them to people with lower income. And sometimes people who have maybe an hourly work system where they may be able to either take more hours or take less hours from an employer, in some ways you can kind of control your income for the year, and therefore maybe even what bracket you're in. I always say to people, don't be afraid of taxes, because, you know, even at the, let's just say the 22% bracket, I'll pick that one. Even if you're paying 22%, you know, you're still keeping 78% of the dollars to yourself. So it shouldn't be afraid of taking more hours or working more. People sometimes say, well, I don't want to get into a higher tax bracket, but all of the tax brackets, even the 37, you're still keeping 63% of the dollars in your pocket. So that's how our brackets work in the United States for taxes. Again, this is the federal tax bracket system that we're talking about. And these can change a little bit. In fact, those income ranges each year do tend to get adjusted a little bit for inflation. So by the time maybe you're working here, you may see the brackets be just a slightly different. And every now and then Congress may decide to change the numbers on the right-hand column in general. That sometimes gets discussed almost every year. We've been pretty steady for the last few years with our brackets, but there's always a possibility for both the left and the right-hand side of this chart to have changed potentially by the time that you get here. Okay.
And Brian, we're starting to see some questions come in the chat, which I absolutely love. So definitely keep them coming. Stalin had actually asked a good one. He was wondering, do we pay the taxes manually or is it auto deducted?
Great question. Thank you so remember what we talk about with the employer and the employee. So whoever you're working for, the employer, you will make arrangements with them to automatically deduct taxes at whatever estimate you think is going to be your bracket for the year. Now, this is such a great question because notice on the chart we're looking at right now, you may not know that in the second half of the year, your employer wants you to work a lot more shifts, and therefore you're going to end up in a different bracket. So it's kind of a guess throughout the year, but to answer your question, these are auto deducted from your paycheck by your employer, but you do have a say in how much gets deducted.
Awesome. Okay. Thank you so much, Brian.
Mm-hmm. All right, let's take a look at just a little bit more conversation around these tax brackets on the next slide with this concept of how your income is taxed. So I'm going to use an example of a $50,000 salary. And again, this is for the entire calendar year. Everything we're talking about is by calendar year. And you may remember from our slide just before that the first $11,600 is taxed at 10%. So on the right-hand side of this slide, I'm giving you an estimate, actually a calculation of how much tax would be due on that first tier or that first layer of your income. And I mentioned it was $1,160. But since we earned $50,000, we have to now go into the second bracket as well. And every dollar that's earned between $11,601 and $47,150 is taxed at 12%. So I'll just ask you to trust me that I did the math correctly, and the answer on the right-hand side is $4,266 of tax owed just for that layer of income. Okay. And then if you noticed, we had $50,000 of income. So that's just a little bit higher than that $47,150 number. So we did just slip into the third layer of taxes with a little bit of our income. And so everything over the $47,151, which is just a little under $3,000, is taxed at 22%. And that's why that tax on the right-hand side of 627 is much smaller. So we can add up everything on the right-hand side with the 1160, the 4266, and the 627, and that's a grand total of $6,053 taxes owed. Now we arrived at that conclusion, and this is how you would fill out on your tax return. Now there may be some deductions. Again, we'll talk about that in just a moment. There may be some deductions or credits. Those are the two things that actually help you on your tax return. But for now, the preliminary tax due is just a little over $6,000. And I put a parenthesis, I put a percentage in parentheses by that to show you that that is an average of 12.1% of taxes. We sometimes call that an effective rate. It's just a fancy word that means average. So if you take that some of our income was taxed at 10%, and then the bulk of it was really taxed at that 12, and then a little bit at actually 22. If you take the average, we call it a weighted average, really, that's where you get the 12.1%. So if you were interested in making this comment, you can say, I basically paid 12 cents on the dollar of my income that year in taxes. That's what we call the effective or the average or the weighted average rate. So that is our tax due. Now, this says nothing about how much do we owe the government when we send in our final tax return, because we haven't talked on this slide, at least, about the money that was being withheld behind the scenes with each of our paychecks throughout the year. And so just before we leave this slide, I'll make an example. If this ended up being our total tax for the year, $6,053, but we had withheld $6,500 throughout the year, we would have a little bit of a refund back, a little under $450 of refund coming back to us. But to get that refund, because in my made up example, we have sent in too much money, we have to fill out the tax return and basically ask the government to send me back a refund check. So the withholding is automatic, but the truing up or the final calculations is done by you sending in your tax return and reporting in about who owes who. Either you owe the government a little bit or they owe you a little bit back. Okay?
Awesome. Right. Thanks, Brian. And I know that you've kind of gotten a little bit into the topic of tax breaks and talking about, when that will help our healthcare professionals out. We did get a question, and you might be diving into this a little bit deeper, but just to kind of provide clarification, it was asked if I am burdened with a lot of expenses in a particular month, can I take a tax break? So maybe defining, what a tax break is, and in what instances that's applied.
Sure, that's a great question. And so I want to use, and they use the word tax break. And so I want to just clarify, when you're doing your withholding through the year, you are allowed to either increase or decrease that withholding throughout the year in really different pay periods, if you'd like. If you have an estimate that you think the rest of the year is going to be less hours worked or more hours worked, then you could do that. But if you had, let's say your car broke down and you had some expenses to repair your car, and that's an unfortunate thing, that is probably not going to be one of those tax breaks that the government will give you an allowance for or a reduction in your taxes. Right or wrong, the government has decided which categories to give you tax breaks on. And medical expenses is one, but even that one, you have to have a lot of medical expenses to get a deduction. And other examples of deductions include things like property taxes paid, charitable contributions, because the government wants you to encourage you to give money to charities. And so those are the kind of examples that could give you a reduction in your taxes. And then there's some unusual ones. I mentioned the solar interest or buying an electric car maybe or something like that. Those are just things that the government sort of runs specials on every now and then when they're trying to incentivize behavior in our country. But unfortunately, it's probably not for, I call them the whoops expenses of our life. If we had some car repairs or our water heater broke in our apartment or something like that. So hopefully that explains the difference.
Yes, it does. Thank you so much for providing that clarification. And, unfortunately, those life expenses do happen. I had some car issues, before the beginning of the year that definitely cost me a pretty penny. But that's also why I like to file my taxes early, because then I get my refund back and I can use that to help me out. But thank you, Brian, for providing that clarification for us.
Well, and that's a great example. If you don't mind, a little bit of a bonus point on this, because I am a certified financial planner. I work with people all the time on helping them manage their monthly money, and it's not easy. Sometimes they don't teach it in schools, but I always encourage people, whenever you say, your money, whatever your income is going to be, let's say that you think you're going to earn $2,000 for the month. We have to take right away from that the auto withholding of federal and maybe state and local taxes from that $2,000. And then my point is also, I love when people also set aside savings on their own for those whoops expenses, those car repairs, because as we like to say, it's usually not a matter of if they happen, it's just when they happen, right?
Exactly, because they're bound to happen at some point.
Sometimes it seems like we have some really heavy months of expenses. So I just wanted to leave you with that quick point, which is, in addition to the auto withholding from your payroll for taxes, I always suggest you do some manual withholding after you receive your paycheck for some savings, so those can be paid as well. But great example, Courtney. Thank you.
Yeah, well, and that's a good point. Oh, go ahead. You're good.
No, I wanted to say this conversation is so good because it leads us to the next slide, where we're going to take a look at even more specifics of different states. So remember, I was talking about states that have taxes, and I said some states do and some states don't. By the way, in case you're interested, a little bit of trivia, there's one state that actually sends you money every month just for living, or not every year, and that's Alaska, because they have all this oil revenue. It's an unusual situation. So out of the 50 states, choose wisely, right? So yeah. But there are states, not that many. I want to say it's around 15. Don't quote me on that, of states that have state income taxes. And I will say in different levels of states. So we chose the state of Ohio. We could have chosen any state for this example, versus Texas. And I mentioned that we happen to not have a state income tax, but I also mentioned, because I don't want you to take that wrong, we do have taxes for other things. Sometimes our sales taxes are higher when we go to the store and buy a shirt, or on our own car may be a little bit higher. And so let's just look at it this way. Every state has to have money to run their schools and build their roads. So they're going to get it one way or the other. But from an income standpoint, some states choose not to tax your income. They choose to get it from other things that, like I said, that you may own. So in this example, we're going to use the same example of a $50,000 salary. And we're going to have an example of someone living in Ohio versus Texas. And you remember that $6,053 number from the last slide that we concluded was the total federal income tax that was due for that person. So notice how that's the same in both states. There's no difference there. And now we go to the second line of this chart, where we show that the state of Ohio, if you worked through the math for that state income tax return, that person would owe about $1,250. Which is roughly 2.5%. So I just put that in parentheses to give you an idea. It's a much smaller percent. If you do happen to work in a state that has state income tax, it's usually a number that's somewhere between roughly 0 and 5% is my experience in most states. So a lesser number than the 12, 22, and even 35% brackets that you can see on the federal government. And then off to the right, notice we have a 0 for Texas, because we mentioned there's no state income tax. Then I also want to show you, remember the Medicare and the Social Security, and I told you that the nickname for those was FICA. That stands for Federal Insurance Corporation, but that's what the tax is. And notice how that's the same no matter what state you work in. Now this is an obligatory or a mandatory tax. You don't have to estimate it, and you don't have a choice about it. And I can see that it's about $3,825 of tax in both states that you're in. So the grand total for both of those is roughly $11,000 versus $9,000 of total tax. The difference really just being that state income tax piece. Notice how all the other pieces were the same. The federal line, the Medicare and Social Security line are the same. And so your take home, and we use that phrase, is how much do you actually get to put in your pocket, is a couple $1,000s different, again, or about $1,250, I should say, in this case, because of the difference in the state taxes. So that's why I mentioned a minute ago, just as a bonus item, whatever your salary is, you need to plan on living on less than your total pay. And I think that's probably true for most places in the world where you work. There's going to be something extracted from your pay. So I know that people want to just do the best they can and estimate how much am I going to finally end up with. Now, I will tell you that for people who work on a salary basis, this is a little bit easier because you know probably exactly how much you're going to have after all these taxes at the end of the month. So you can plan on, you know, how much do I go out to eat and how much do I plan on maybe going to a concert or fun things like that. For people that work hourly, it's probably pretty steady. But I know for sure, especially with nurses, you may pick up an extra shift or maybe change a shift, or maybe you got sick and couldn't work a shift. And so your income could be a little bit more different each month or per pay period. So that's just something to keep in mind, I think, as well. Okay. All right. I think we're doing great. I think y'all are doing great on the understanding here so far. I just want to move to a next slide and where we'll get into a little bit more about how you file the tax return. Now, you heard me say earlier that your paycheck is done through what's called a payroll system, and your employer is obligated to report to the government and maybe the state, if you're in a taxable state, how much income you earned. So some people say they're telling on me, and I say, well, no, they're actually obligated to do that. And from a corporate standpoint, they want to report how many wages they paid. It helps them on their corporate taxes, of course, as well. So there's gonna be a report sent to either the federal and maybe also the state or local about your earnings, and it's done through the payroll process. Now, at the end of the year, there's a form that comes out called a W-2. We have a lot of funny names and numbers for our forms here. So the W-2 is the final scorecard of how much that employer paid you for that calendar year. Now, if you happen to work for 2 or even 3 different employers different during the year, you will end up with 2 or 3 of these Form W-2s at the end of the year. So all of these W-2s have to be included on your federal tax return. That's that Form 1040 we mentioned earlier. They might also have to be reported on a state tax return. I just want to keep saying that if you happen to be in one of those states. But that's how the process works. So the reporting is automatic by your employer to the government. And so think of it this way. The federal government, they got reported by your employer that you made, let's just say $50,000 this year. So now the government is waiting on you to fill out your own Form 1040 and show that hopefully matching number. They're looking for that confirmation from you with you filing your own tax return. And then so the computer systems actually can, find out if there's not matching. So I guess if somebody decided to report a lower income than their employer did, they would probably, start the matching process with the government, and you'd probably get a notice about that. So I know we don't want to do that. We're just going to report what's on our W-2 and put it on our Form 1040. We talked about the timing of that. So the income is added up for the entire calendar year. And then we have this 3.5-month window until April 15th to file the tax return. Now, if for some reason you're having trouble getting all of your data together and filed by April 15th, you can file for an extension. And our federal government allows an automatic 6-month extension. So all the way from April 15th to October 15th. They used to make you write a little note on your tax return and explain why you couldn't get your tax return done. I remember days and days back, years and back, we used to have to write a big, sob story about, what happened in your life and my dog died or, something like that. I don't know. And anyway, it's automatic now. You just turn in the form if you need to. But here's the important point of this story. If you apply for an extension, it does not extend the time that you have to pay your taxes. So it's kind of an interesting thing. Basically, if you file for an extension, you're saying, I'm going to turn in the form later, but here's what I think I'm going to owe you when I do turn in the form in October or anytime between now and October. So by April 15th, you still have to pay what you think you're going to owe, or there could be penalties. So I wanted to address that whole extension concept to see if that helped you with that. So that's the time period. It's a 15.5-month total time period, the 12 months of the calendar year, and then the 3.5 months that you have to turn in all your documentation of your reports. Okay. All right. We doing okay on questions, Courtney?
Yeah, we do have a few that are coming through. And you're doing a great job at providing them examples. I think we're able to answer some questions that are coming through, during the presentation here. Nina actually had a really good one, and she had asked if I'm still earning income from my home country, since, as you know, all of our healthcare professionals are living elsewhere and traveling to the United States while they're working in the United States. Do I need to report that income as well?
Nina, that's such a good question. And I will tell you that my answer is going to be, it depends. And I will say it usually does need to be reported, but income from two different countries, many countries have what's called tax treaties with each other, where they make a deal so that people are, as much as possible, so they're not double taxed. Now, these tax treaties will dictate on which country's tax return do you need to show which country's income. And so every country is different. So it would be an example of something that you should, get a professional to give you advice on this. But it is a really good question. But the good news is that most of these countries try not to double tax you on that income. Okay.
Yeah, I agree. And I think too, for our healthcare professionals, that's good information to know. Since this will be something that's new for you once you start working in the United States, and we've mentioned several times that it can be confusing, it's good to seek out a professional that you can sit with, and they can kind of look at your own unique situation, because everyone's taxes are different. It depends on what's going on in your life and where you're working. So it's really good to seek out a professional. I know I'm no tax specialist, so I always seek out someone that is able to help me with my taxes during this time of the year, that can answer any questions that I might have. So if you do have a special scenario, in an instance like Nina, I think it's good to seek out a professional to help guide you to make sure that your taxes are filed correctly.
Absolutely. Well, y'all are doing great. By the way, if you come to Texas, you have to learn to say y'all. So I apologize that that's how that works. I have a couple of concepts left I want to get through, but y'all are doing great. We're going to go to the next slide. We're going to talk just a little bit about these deductions and credits that I referred to. So again, this is the government's way of trying to help and ease the tax burden on taxpayers. So the income category, I think we all understand that it's the earnings that I got from my employer, maybe some interest or dividends on my investments if I have any in my savings accounts and things like that. Even some crazy things like if you have gambling winnings, there's a whole long list in our country of things for income. Now, deductions and credits. Here's the thing: you can either add up your deductions for yourself, or you can say, you know what? I'm just going to take the standard deduction that the government gives you. So every taxpayer, whether you are a citizen here or just working here, everybody gets what's called a standard deduction. And this is for the people who the government says, look, if you just don't want to keep track of your charitable contributions and your property or your vehicle tax, during the year, if you don't want to spend time adding all those up, then you don't have to. We're just going to give you the standard deduction. And there's a different amount of that depending on whether you are a single person filing a tax return or what's called a married filing joint. So a married couple filing a tax return where they include both of their incomes on the same thing. Obviously, the married couple would get a higher standard deduction than a single person would. So just know that if you don't intend to, or you don't just have the interest in tracking expenses, you can take the standard deduction. I will tell you personally, the standard deduction is a pretty good deal. And for most people, they've actually raised the standard deduction as the years have gone by to encourage and actually allow more people to not have to track all their expenses during the year. So I'm just going to tell you, I think the majority of people in our country just take the standard deduction. The other items are called credits, and those they're called, I say, situational credits. So they're only if you happen to have that situation. Maybe you have a child that's in school, or actually just having a child at all. There's something called the child tax credit, for example. And this is to help people because it's expensive to have a child, right? There's diapers and sometimes daycare, and it just seems like it goes on and on. So the government is just trying to help people that have usually smaller children, but children at all. There's a child tax credit. There's a credit if you have some in school, like college. I mentioned some of the other different ones about, different vehicles and energy credits and so forth. So you can look at the list, and then the taxes paid is the result of the first two boxes on the left. Income less deductions and credits will result in your final tax. Again, we're going to compare that with the contributions, or the donations, I like to call them. That's probably not the right word, but the contributions during the year. They'll compare and see who owes who. Now, most people do those contributions through their paycheck, and it'll show up on their W-2 at the end of the year. One quick comment for people that happen to be self-employed, or maybe what we call independent contractors. You will, instead of getting a W-2, there's another form. I'll just mention the name, but it's a form 1099. And that's just what we call for independent contractors, people that are not employees of an organization, but they are working there as an independent contractor, where that name comes from. And those folks generally need to send in what's called estimated payments. Those are done, or required to be done, 4 times a year, every 3 months or so. Not exactly, but almost. So every 3 months or so, it's encouraged for independent contractors to send in a contribution. It's the same concept.
Oh, Brian, I think our connection is breaking up a bit. So I'm just going to do a slight.
Are you still there? Are we good, Courtney?
Yeah, the connection's breaking up a little bit. So I just want to give it a second to reload. So that way we can pick back up on your presentation here.
I think my clock is ticking perfectly without a gap, Courtney, so I may continue if that's okay.
The connection is just a little.
So I think
spotty.
I think Cole, a couple people have told me that my connection is good. I'm just going to go ahead and finish. Let's go ahead and go to the next slide, just so we can make sure we get the information. I wanted to just answer that last question about how tax returns are prepared. You are allowed to complete your own tax return. There's even some people that like to fill them out by hand. Most people in our country use a software system. A couple of names maybe you've heard, like TurboTax or H&R Block or something like that, is what the majority of our country uses. And some people actually go to a CPA, a certified public accountant, and have a professional do them. But you usually don't need to do that unless you have a complex situation, maybe a lot of assets that you own, or some strange kinds of income and so forth. So I will tell you that for most of you, you're probably going to be using, some sort of a tax preparation software. And those are very cheap. Some of them are even almost free when you do that. And they have a lot of good guidance and people to support you during that process. So just wanted to finish that last topic about how the tax return is actually prepared. Okay. All right, Courtney, are you still with us? Are you doing okay? All right, we may be losing Courtney a little bit. I'll see if I can see any of the questions in the chat to help with this. I think we talked about the traveling. We talked about income from different countries. Yeah, I think we're good. I'll just say as a final point, one of the things about our tax system is that they do try to make it as fair as possible. It does always change just a little bit throughout the years. So what we're providing to you is the information about how the tax brackets work now, and it might adjust a little bit by the time you get here. But just remember, earning income is a good thing. Don't be afraid of the taxes. We all want to make sure we do pay our fair share. But just know that when you get here and you start earning money, there's a lot of support and a lot of people to help you through this process.
Thank you, Brian. I really appreciate you taking the time. I've learned so much myself about taxes today, so I appreciate you taking so much time to dig deeper, explain the concepts, and I hope that all of our listeners are able to take something with them today. So thank you, Brian.
You're welcome.
All right, Brian. Well, we definitely appreciate you breaking down taxes in the United States and giving our healthcare professionals a little more information. So we'll go ahead and proceed with our live Q&A since we did have a couple that we were not able to get to. So just to jump into some of the questions, we did have a question here by Giodial who asked if we are going to pay those taxes every month. So I know you kind of talked about, how taxes are on their 1040 form that they're going to fill out, but are they going to have to pay those taxes each month from their paycheck? And then at the end of the year when they file their taxes, what happens?
So great question. I'm going to try to answer all these questions very succinctly so we can take as many as we can. Remember, the tax that you pay is calculated on an annual basis, and you make contributions on a weekly or biweekly or a monthly basis as contributions toward those. So you are taxed on all your income. You're making contributions throughout the month, and then we'll see at the end of the year if you've overpaid or underpaid those contributions.
Awesome. Thank you. And we do have some healthcare professionals that ask if they can work at another job while they're also working in the hospital. So a lady here asked if she's working in two places, are they going to be double taxed?
Oh, good question. The answer is not a double tax. Remember, if you have 2 or even 3 jobs or more, you're going to get a W-2 from each of those jobs. And at the end of the year, we're simply going to add up those W-2s all together and then apply them to those brackets. Remember the brackets, the tiered schedule we walked through. So if you have more than one job, it could increase your taxes, but I don't think it's going to double them. So I wouldn't be afraid of that. I think if you need the income and you enjoy working, you should do that.
Yeah, absolutely. And given if someone is working in 2 different places, Nina had also brought up a good point. Are there tax implications if I send money back home to support my family? A lot of our nurses will work and send money home to their families to try and support them, even though they're living in the US. So I think it's a good plan ahead, if it affects them in any way.
Well, first of all, what a wonderful thing if you're able to do that and to help your families back home. But the answer to this question about federal and state income taxes is there's no impact on that. That's just something that you may choose to do personally with whatever money winds up in your pocket after all the tax system has been calculated.
All right, perfect. And then I know we kind of broke this down a little bit when you were talking about if they were to pay too much and get a refund back, or if they were to not pay enough in taxes and then So Janet was wondering, are there ever instances whereby, you may be overtaxed?
Well, I don't think so, only because the system is pretty detailed. The rules are spelled out. When you fill out your tax return, you're going to fill it out, and you're going to fill it out based on the rules that are applied. Your employer is going to withhold income taxes based on those rules. So I can't really think of an example where you'd be overtaxed, at least not on purpose. Now, some people actually make errors on their tax return when they fill them out, but that's a different story. That's more of a clerical or math error sometimes. But no, overtax should not be an issue in most cases, I don't think.
All right, perfect. Thank you. And then I did want to highlight this question that came in from Rosemary. And this might be a question that I might be able to answer for you too, Rosemary. But is the amount of money that nurses earn from Passport USA taxed, or is the government taxes or does the government tax the company? So when you're working at your facility, Health Carousel doesn't take anything out of your paycheck. So the money that you earn is going to be the money that you earn. Brian talked about federal, state, local tax. So all of that is going to be taxed from a paycheck from anyone that's working in the United States. So you'll see those deductions coming out of your paycheck, but from Health Carousel as an agency, we don't remove anything from your paycheck. So that is going to be your hard-earned money that you are going to be able to keep. And then Sadek here did ask, is someone from Passport USA able to help us file income tax? So as part of our full circle of support, we want to make sure that we're setting you up with success and having you feel confident when you're filing your taxes. We are so lucky to be joined by Brian here today so he could dive a little bit deeper, and we want to be able to guide you and direct you on who you can contact in order to help you file your taxes, along with plenty of tax specialists out there. There are also online platforms if you're looking to file your taxes yourself. So you'll be working with an international employee supervisor, and they will be able to guide you on the resources that you can use when it comes time to filing your taxes to make sure that you meet the deadline of April 15th and that you're filing your taxes accurately and confidently. So, Brian, those are all the questions that we got today, and I think you were able to cover a lot of information that is going to be extremely helpful for our healthcare professionals when planning on working in the United States and kind of adjusting to that and what they can expect. So I appreciate the time that you took to join our broadcast. I know I learned a little bit about taxes, so I hope our audience did too. We are very grateful for your time today and all of your insight on the U.S. tax system.
Thanks for having me. I love being here with y'all. Good luck.